Hello everyone. On behalf of Investor Relations Society, I would like to thank all of you for joining us for the IR Awards 2020. I would like to begin by reading out a message on behalf of Mr. Anand MS, co-founder of Investor Relations Society. He says, the idea behind creation of IR Society was to create awareness of investor relations and to develop the same as a profession. Towards this end, a certification in investor relations with BSc Institute was also launched about 5 years back. As they say, there are some things that get better with time, and an investor relations profession is one of them. Over the last 1 decade, the IR profession has gained immense prominence. IR is not only emerging as a full-fledged profession, but some IR professionals have even moved up the hierarchy to become CFOs and in one case CEO too. That was Mr. Anand's message, and I thank him for this. I would like to now invite Shri Ashish Kumar Chauhan, MD and CEO BSE, for his keynote address.
Friends, it's an honor to be in front of you today. Investor relations is a very important subject in taking the investor democracy or corporate framework further. In any functioning stock market, the investor relations which the companies have across all the companies is very, very important, because investors need timely information, strategic information, tactical information, and all types of information on runtime. And that's how they are able to understand whether the company is working well, and also in the interest of its owners. Because ultimately investors are the owners, and the management in some ways have been authorized by the owners to run the company. And that's where I think the investor relations related awards are absolutely important in India. India has over last 25-30 years since the SEBI has come into existence, has taken tremendous lead in ensuring that the investor democracy gains ground. And today, if you look at the World Bank rankings, especially for the minority investors' rights, India ranks ahead of US and many other developed countries. So effectively, the Indian investor rights are tremendously protected compared to larger, more developed markets. Similarly, the Indian Companies Act 2013 also has come out with some path-breaking legal framework which provides additional protection to small investors and even large investors. In addition, SEBI has also been insisting on stewardship and other frameworks where the larger investors also take care of the smaller investor rights and also become accountable. So I think overall, India is doing wonderfully well, and it's important that we recognize the companies which are doing well in investor relations, so that they become role models for other companies to also follow. Large portion of the investor relations are now happening through what I call the disclosure framework. But if somebody goes over and above that and beyond that to have better relationship with the investors, and all of them, not only few, I think that needs to be applauded. And that's what the investor relations awards are going to do. I'm delighted that the BSE companies, which is pretty much the entire universe of Indian listed companies, are being recognized in this award ceremony. So my best wishes and congratulations to all the winners. But I think overall, these companies should also reveal what they do extra to be in touch with the investors on a continual basis, be transparent about their activities, and so that other people can also follow. That would be the expectations from our side, that every company should emulate the best who are getting these awards. And that's where I would be delighted if the organizers also give some case studies and also publish how these companies are better than other companies, so that other companies also can follow in the footsteps of the winners. With that, thank you very much for calling me.
That was a very inspiring speech on investor relations by Shri Ashish Kumar Chauhan. I would now like to call on the speakers for our panel discussion, where our theme for the discussion will be IR in pandemic, which is very timely. The panel discussion speakers include Mr. Ambrish Baliga. Mr. Ambrish Baliga has little over 2 decades of rich experience in stock markets. He is now an independent consultant. Prior to that, he held senior positions in companies like Way to Wealth and Kavi Stockbroking. Next, we have with us Mr. Sandeep Mahindru. Mr. Sandeep Mahindru is the current finance controller and head investor relations for IT giant Infosys Limited. He has been associated with Infosys since 2 decades in different capacities. Next, we have with us Mr. Amit Tandon. Mr. Amit Tandon is the founder and managing director of Institutional Investor Advisory Services, which is the country's well-established proxy advisory firm dedicated to providing participants in the Indian market with independent opinion, research, and data on governance and ESG issues, as well as voting recommendations on shareholder resolutions. The panel discussion will be moderated by Mr. Karan Marwa of KPMG India. He is the partner, CFO Advisory Services and Head Capital Markets, KPMG India. He leads the firm's IPO advisory services, providing strategic and tactical support to companies in their journey to go public and deal with life as a public company. I thank them for coming together despite their busy schedules. Let's hear their thoughts.
Hello and welcome everyone to our panel discussion today on the sidelines of the Investor Relations Awards. I have with me today a group of very interesting gentlemen who will be my fellow panelists as we discuss some interesting trends that we've seen in the space of investor relations. Before I introduce them, I think I just want to set a little context on why are we here today and what are we going to be talking about. And really, I think, if one looks at what's been happening in the space of investor relations, especially in this past 1 year, I would say, the word interesting is very severely understated. I think we've seen a lot of change, a lot of disruption around us, and in no small measure, thanks to the virus and the pandemic and the resultant economic disruption that it's brought about. And that's meant that corporates around the world and in India have seen a lot of turbulence in terms of how their businesses have been impacted. Some have done well because of the virus, but a large number of companies have faced significant hardship due to, again, the disruptions caused as a result of the pandemic. And I think what that brings forward or that's brought forward is the heightened need for companies to continue talking to their investors through this period. And that's where the investor relations function has had to really step up and play a much larger role than possibly at any previous time, at least in the last several years, and more so in my experience at least. And I think that, and then as they say, in every crisis lies an opportunity. But in this one, I think we've seen a lot of companies really sort of step up their game as far as it's relates to talking to their investors and keeping them engaged. What we've also seen as interesting trends through this period are really a couple of things that I would like to highlight. One is how the whole discussion around ESG has really come to the front and center of virtually every corporate boardroom. I can say in my consulting experience and when we open up the discussion, we'll hear from our guests also. I think the amount of attention that ESG is receiving today is unprecedented. In a lot of ways, I think it's justified. Also because of the fact that as the whole economic environment got disrupted, businesses actually had to take a very hard look at how and why they were in business and how they've been creating value for their investors. And I think whether you look at environment or from a social perspective or from a governance perspective, all of those have received or have become critically important as far as the path forward for companies is concerned. And then we'll talk about how and what our experience has been as I open it up with my guests. The third and last point I wanted to make was really how the non-financial aspect of a company's performance, and it actually ties back to the whole ESG agenda, has become again something that is receiving a lot more attention. It was a trend that I think has been in existence and has been talked about for several years now. Whether you think about the genesis of business responsibility reporting in India, whether you look at how a number of companies continue to adopt integrated reporting in India and around the world, uh, those are a few examples. But I think when we talk to companies and what we hear increasingly from CEOs, from CFOs, from boards, is that really how and why companies exist is to create value in a lot of different ways, and a large part of that today is non-financial. And I think that again goes back to really the core of the role of any investor relations professional, on how he or she captures all of that value, how he or she deals with these sort of this turbulence that's been thrust upon us, and how one moves forward from here. And I think as the awards will be recognizing companies that have done well, we'd like to talk about some of the things that had potentially worked well, that we've seen companies do well, and also where there could be more effort required. So before I move forward, I'd love to introduce my guests on the panel today. I'll begin with Sandeep Mahindru. He's the head of investor relations at Infosys and has been in that role for several years. He's been in Infosys for a longer period, but I think he's someone I go to quite often to talk about and understand really what's the pulse of the profession, what's the pulse of corporate India as far as investor relations are concerned. So welcome, Sandeep. We also, hey, we also have Ambrish Baliga, a very senior capital markets expert who actually needs no introduction. He's been in that space for over 35 years, and is someone that a lot of people look up to when they are thinking about the pulse of the capital markets. And we're not going to ask him today how and why the capital markets are behaving in the way they are. That is for another day. But welcome, Ambrish, and we'd love to sort of chat with you in a little bit.
Thanks, Karan, for your kind introduction.
I also have with me Amit Tandon, last but definitely not the least, who heads IIAS and has been really at the forefront of driving the ESG agenda from a from the other side, I would say, not from a company, not from a practitioner's perspective, but really encouraging companies to take it up. He's been on several committees, including with the RBI and on the Kotak committee for corporate governance. And a lot of us have had very passionate discussions with him on the topic of corporate governance. And we'd love to see some of that passion today too. So welcome, Amit.
Good evening. Looking forward to the discussions this evening.
Excellent. So I think thanks everyone again for taking the time out to do this. And I'd like to kick this off by reflecting on what I said when I opened this up. But really that, again, in terms of the changes we've seen happen through this year and the crisis that was thrust upon us. And if we wind back, probably in the middle of March, it was right in the beginning or so close to, the end of the fiscal year, right, in a way, and then very close to the point where companies were actually looking to or would have, looked to announce their results for the fiscal year. And of course, what that meant was, SEBI came out with guidance on what needs to be done in the situation that, again, was thrust upon us in terms of the timing of the results announcement. But I think since then, a lot of water has flown by. And, we went through an extended period of lockdown in the country, which again caused, supply chains to get disrupted, caused, virtually put a brake on consumption, not just in India, but around the world. And eventually, obviously brought the focus back to really, companies looking at themselves and thinking about, how do we sort of where do we go from here? And Sandeep, I'm going to open this up with you to, I know you've been, with Infosys for several years and been in this role for several years. Now, I just want to get a sense from you to open this up on, if you were to reflect back on all your experience, were you prepared for something like this? And that's my first question. And then, if you were, what really worked for you and what worked well for Infosys in terms of just, being able to talk to investors and continue talking to investors and others through this period when, of course, you're, in terms of the disruption that your businesses saw. How did you go about, at least putting up, your perspective to investors? So over to you, Sandeep, to open this up.
Yeah, thanks, Karan. Thanks for having me here. And folks, glad to be talking to you all. So clearly, I don't think we saw it coming, and I'm not sure who can really claim that they saw it coming. So it just caught us and pretty much everyone by complete surprise. There was an impact on business visibility, but I think the leveler in some ways was that this was a very, very global event. And we realized that while we are struggling for clarity, when we reached out to investors, when we reached out to get a sense of what our clients are seeing, I think March, April was about tremendous state of uncertainty. Everyone was groping in the dark. And I think that's where we got a sense that specifically investors are looking for a period of hand holding. They are groping in the dark just like us. It's very important to stay connected, very important to stay engaged. Even if maybe at the end of that 30 or 40-minute meeting, there is nothing really concrete which gives them a comfort or which gives them the sense that there is light at the end of the tunnel. The basic thing, the more fundamental thing is it's important to talk to them, because at that time, if you just disassociate yourself or disengage with investors, or for that matter any constituency, I think it just gets worse for corporates at large. So that's point number one. And I think what we also realized was that over a period of time, investors are smelling opportunity, because stock markets had seen a significant beating. So there was a lot of money that they felt can be made over a period of time if they make the right decisions. And probably initially, it was difficult to engage with investors in a virtual setup. Again, there's not really a setup that we have been engaging investors in. But the fear initially was that will investors really pull the trigger? Will they make a concrete decision to buy the stock at the end of the conversation? And time proved over a period that I think they also became comfortable with some repeat interactions in setups like these. So I think March, April, maybe early part of May was about significant uncertainty, but things did start to evolve. As humans, most of us are fairly adaptable, and I think everyone has really started to live with it. So things are coming back to normal. Engagement in setups like these are not necessarily fretted at the way they were earlier. And I think it's good to get some sense of confidence back in the overall setup.
So Sandeep, thanks for that. But I think I'm going to go back to what I was, asking you earlier. That and as you said, while we've gotten used to this new way of engagement and talking to each other and interacting with each other virtually, I think how is that working for you in terms of your specific conversations with investors? And as I asked this because if we wind back a year ago, it was all about meeting in person largely, and then getting to know each other, getting to see the facilities, getting to know key people at the company, and especially we think about investor targeting, right? Bringing on a new investor on your cap table. I think that's really is a journey, right? One needs to get comfortable. The investors need to get comfortable with you and what you're giving out or holding out as a proposition. Now, how has that worked for you in a digital forum? Because obviously, I think, like you said, we've all gotten comfortable to at least interacting with each other. But I'm just curious to know, any insights there?
Yeah, so Karan, I won't say it is the same as meeting face to face in a physical setup, but I don't think there are too many choices, that people have learned to accept that. Um, what we have realized is that in conversations with investors, if you can just try and personalize it to the extent that probably do basic things like turn on the video, the comfort level ends up being higher. Probably takes longer to convert an investor compared to what it would have been had it been a face-to-face meeting. But these are additional efforts that need to be put. So I think eventually it has turned out the way we thought. after obviously some hiccups, some back and forth. Targeting, I think it's again a bit more difficult, especially with the new ones. But the good thing also is that due to the pandemic, people are not able to travel. So actually, we can use, and we are trying to use this opportunity to reach out to investors in locations where probably we won't have travel to. So if it's maybe some of the key markets that we have externally, maybe Scandinavia, parts of ASEAN region, etc., where we don't necessarily reach out to investors, this is a good opportunity to reach out to them, develop some connects, and hopefully some of them will convert over a period of time. So I think there are opportunities in a crisis that we have tried to, in this crisis that we have tried to find.
Absolutely, and I think, but you still haven't answered my question on, did the previous 10 years prepare you for, what was coming? And I'll tell you why I'm asking you this, because, I think we've always had, a number of conversations, and, when it comes to, what should a company be saying when the times are not good. And I think the common, at least, wisdom is that, you be honest and you be straight with your investors, right? Because no one likes bad news that's hidden away. If it's bad news, you bring it out, you talk about it, and you get on with it. And it's more important that you talk about what you're doing to fix it. But again, throwing it back to you, did the previous 10 years prepare you for this? And did that logic prevail? In I'm not saying that you had bad news to sort of convey, but in a general sense, do you think that that principle still holds, or has that actually been reinforced by that crisis that we've seen?
Yeah, so what I have learned, Karan, is over a period of time, there are certain principles that we have to stick with at any point of time, irrespective of whether the going is good or rough. And I think being proactive is definitely one, being engaged is another one. Specifically in rough weathers, like we have been for the last year or so, these are also opportunities where you actually should collect feedback and relay it back internally. When things are good, probably communication is more about what the company is doing and taking out that message to investors. But this is the time when actually you end up getting a lot of good thoughts, you get clarity. These are people who are very informed. So use that as an opportunity to pass the feedback internally to the management team. And I think this is something that we have at Infosys probably seen different levels of crisis over a period of time. Maybe not the kind that we've had over the last 8-9 months, but some learnings which we have tried to implement in the last 9 to 10 months.
Okay, I'm going to come back to you and ask you for your top three a little later. But let me shift gears and then take this to Ambrish. And Ambrish, I think you heard Sandeep
Right.
and you heard some of what I said. But given where you sit and the work that you do, with the companies that you advise, or even with some of the in your role as an advisor to a number of individuals also. I think where I want to take this now is to really say, again, from where you are, have you seen companies do enough? And, what are some of the best practices you've seen that companies came up with through this period when, they were talking to investors that you think are worth replicating, for others? And then again, maybe where an investor's hat, when you sort of talk about this, because I think what we've heard interestingly is that the level of patience that investors have has also possibly gone up. I don't know if you agree with that, but I'm going to throw this to you.
Okay. So, in fact, I'll be talking more from the mid and small cap companies' point of view, which in fact I track quite closely. And what's happened now is many of these mid and small cap companies have actually rediscovered investor relations. Basically because of COVID, and there was this regulator push. And at the same time, after that initial crack in the markets, we saw the markets rallying in from June, July onwards. And we were clearly back more or less in the bull phase. And generally what happens is in the bull phase that these companies start discovering that IR is extremely important. And the way I see it is it's not just a communication tool, it's actually a brand building exercise for most of them. Basically building their brand among the key stakeholders, whether it's customers, vendors, employees, and the rest of the ecosystem. So, generally, during the bull market, most of them get into this, IR work because basically, one can say that it has a major bearing on the perception of the company and subsequently on the price and the market cap. But then the mistake most of these people do is actually get into this activity with a very narrow focus. They tend to possibly over-communicate initially And then after some time, they actually go completely silent, except for meeting the statutory requirement. And then again, most of them expect that IR activity should give them that instant gratification. And unless we see this mindset changing, I think it'll be more in letters than really in spirit that you will have the IR activity happening. And especially because of COVID, we had that SEBI's requirement of additional reporting. And what I actually saw for most of these mid and small cap companies was that they were just checking out as to what others, especially the larger ones, were reporting. They were using the same structure, changing the wordings here and there, and reporting whatever they were supposed to report. So that's the reason I'm saying it was more in letters than in spirit. But then what I saw in most of these companies where at least they got used to, the digital side of it. They got comfortable with doing all these video calls with analysts. And at the same time, what some of them did quite unique, and which I think could be replicated by many others, is that they started doing corporate videos. Because earlier, the communication with investors or analysts, other than one-to-one or one-to-many sort of investor conferences they used to have, they could communicate via the normal TV channels. But now what quite a few of them started doing was they started doing corporate videos. And now since we cannot go and meet the management, or we cannot even go and see the facilities, I think this corporate video is something which actually helps investors and analysts to really understand the company better and understand the processes better. So I think that is something which possibly could be replicated.
No, I think that's actually heartening to know, because I think one of the things that has been a constant is really how how few of India's companies really focus on investor relations in a meaningful manner. And I think this is meant to sound provocative, as it probably does. But if you're telling me that it has gone up through this period, I think that's a welcome change, and that's a good change that hopefully is here to stay. And I think in some ways you're right. I think the digital forum does allow more companies to do this, and especially the ones who may not have the means to, or the ability to spend on again, possibly organizing physical interactions, or maybe in locations that don't even facilitate or permit that, right? So I think that definitely helps.
And in fact, the cost of investor relations is actually, if I'm not wrong, has come down for, I think, most of them as compared to earlier. Because earlier it meant for your plant visits, and in every plant visit, the amount of money you have to spend, and also on those conferences, investor conferences or analyst conferences which you have, the amount of money which was spent, I think all that is saved because of this digital forum now.
Yeah. Amit, I'm going to bring you in here. What is your perspective? Having heard Sandeep and Amrish, and more so on this, the whole, I would say, beginning March period, and then what happened with SEBI's requirements around additional information that companies had to publish on the impact of the disruption. And again, link this back to, again, I think I guess the longer term sort of phenomena we've seen in terms of possibly not necessarily giving out more information than what's been asked for. And I think that's what Amrish was also alluding to, that in terms of if there's a minimum set of prescribed information, obviously you're compliant by providing that, but is there merit in going beyond that? And then what has been your reflection in terms of companies' willingness to do that? Because this was the perfect period and the perfect storm to do that, right? In terms of and there was, again, a regulatory lever here when SEBI went and asked for companies to put out more information on, what is the impact that the disruption is having on their results. Over to you, Amit.
Sure. Karan, I'm going to come to that subsequently, but I just want to point out one thing, which is what corporate India has done fantastically, which is the shift which we had to digital shareholder meetings. And I would give a lot of credit to the IR teams as well as the company secretarial teams and the CFO office, that we kind of hit the pandemic and kind of went into lockdown towards mid to end of March. But within 6 weeks, everyone was ready with a solution. The fact that when the whole when the season began, and for us the season is pretty much March to September, April to September, we were kind of asking ourselves, and when the SEBI kind of said companies can push back AGMs, etc., it was unsure what is going to happen, and we started kind of talking to companies. The fact that most of the companies we spoke to kind of turned around and said that, look, they're working to complete the AGM and all the related formalities by the month of September. So admittedly, some of them did get squashed towards the last, towards end September. But nonetheless, it is remarkable how well companies were able to cope with this. And, regulators made it possible, but it won't have happened if companies and the IR teams had not gone that extra mile to ensure that this works seamlessly. Here, I'd like to say that, look, two things. First is, continuing on the good news. When we compare to what happened in India versus, when we look at some of the other Asian peers, I think again on that India did very well, because India was the only economy which I'm aware of which permitted only digital meetings and did not insist on physical or hybrid meetings. Most of the others kept saying that, look, you need a hybrid meeting, which kind of sent a mixed message. And again, if you look at, a country like Korea was not sure whether hybrid meetings are permitted or not. So they kind of said that, look, in the absence of it, we take it that digital meetings or hybrid meetings cannot happen. They have to be physical. Singapore said that, look, while we are having AGMs, if you have any questions to ask, you have to send them ahead of schedule. India kind of said that, look, you can have these in the virtual meeting itself. And I can kind of go on and on about some of these examples. So that is something which worked well. Related to that is the fact that, companies, they wouldn't have had their AGM if they hadn't got their disclosures in place. Now, I would say that, again, I kind of would break up the disclosures into two parts. One is, when we were speaking to companies, understanding from them what is happening. One of the things which was happening was that there was an increased engagement which was taking place between the companies and their boards. In one extreme, of course, there was a weekly discussion which was taking place, and it's kind of quite understandable because pretty much till March, April, companies were figuring out, and the smaller ones, particularly if they're solvent or not. And then the focus kind of started shifting to, look, we've got the bank lines. We do believe we are going to be operating, and therefore let's kind of shift focus on operations. And then, of course, getting labor back and so on and so forth. But on that, the communication, at least till SEBI came up with its guidelines or guidance saying that companies need to report more, companies were unsure in terms of what they need to do. Having said so, when we did speak to a lot of companies and investors, one of the things which was clear was that there was an ongoing dialogue, which is that, investors used to pick up the phone, talk to companies about what's going on. And that communication at least was going on. At least we've again got that sense that it was those channels were open rather than anyone saying that, look, I'm not going to talk about it. So that is again something which has gone well. Which brings me to a broader point, and Sandeep had kind of alluded to that in terms of the past experience. So I know that this pandemic is not over, and even as we are speaking, there's this whole thing of a fresh wave which is happening at least in UK and other parts of Europe.
I think Amit seems to have had an outage. Maybe we can continue, and I'll maybe come to you, Sandeep, while Amit comes back. I think on the topic of how companies create value, and what does that mean today, given again when a large part of the economic value companies were obviously are in business to create went away. primarily because operations got disrupted. I think in our experience, we've seen a lot of emphasis come back on the non-financial aspects of how value gets created, and really, how do you communicate that? How do you articulate that to your investors? How do you get your arms around it in the first place, within the company, and then how do you take it out and use it to put out an equity story? So, Sandeep, what has been your experience? And I know you've been at the forefront of corporate reporting in a lot of ways, but maybe in terms of the whole emphasis on the non-financial aspects of value creation and how that shifted, for you and your experience through this period.
Yeah,
And
that's a very good
let me go
question,
back to
Karan.
Amit. Yeah.
Yeah, that's a
Yeah,
very good
like
question.
I
And
kind of had a glitch on technology at my end.
Yeah, you were talking about technology, and that's what it did to you. But we'll come
That's
back to you very
correct. That's
quickly.
right. Okay, let's continue, and I'll kind
Yeah.
of come back on this
Yeah.
when the
So
time is right.
yeah.
yeah, so I think when the pandemics broke out and there was a significant sense of uncertainty, and that led to a situation where Infosys, in its history, for the first time, could not provide a guidance. So, as you rightly said, it was very difficult to talk in terms of numbers. And I think we consciously tried to pivot our conversation with investors around the key priorities, how we are trying to grapple with the pandemic situation, the sustainability and the soundness of the business model. So the conversation was more in terms of that, yes, we are living in a period of uncertainty. It's difficult to get a handle on the magnitude of impact, the duration of impact. But technology, which is really a spending driver, is something which is here to stay. And I think to that extent, we made some changes in the way we were conversing with investors back then. So that was one. Secondly, I think we touched upon it to some extent earlier. This entire thing on ESG is coming back in a much stronger way. It's something which I think is for real. Recently, with one of the board committees, we did reach out to one of the top three global investors, top three passive global investors, who has a very strong stewardship arm, and the conversation was heavily focused on the ESG front. Now, it's just a matter of time before it comes more seriously, and I think it's one aspect that IROs and companies will have to be prepared for. So I think if I look at really last 8-9 months, Karan, first 3 to 4 months was really talking about maybe the non-financial aspects and the resilience of the model and things like that, just to give a comfort to investors, as well as I said, try and get some sense from them as to what they're seeing in other companies and use that as an avenue or as a tool for competitive intelligence perspective internally. More recently, as things have started to stabilize, the normal market activity has picked up. There are more conversations happening on some specific aspects like ESG, which again is not a classical or a conventional aspect that IROs have been dabbling with.
Yeah, yeah. No, thanks for that, Sandeep. And I'm going to come back to the ESG point very quickly. But Amit, since you're back, why don't you complete? You were talking to us about how you saw a lot of positive developments, through the period, including the digital annual meetings. And I think that I can't but not agree with you. I think the pace at which that got adopted was fairly remarkable. But would you like to go on, Amit?
Look, I was saying that in terms of, yeah, I don't know when you lost me, but first is the number of board meetings went up, but till such time as SEBI kind of came up with its guidelines saying that companies need to communicate, they were a little bit unsure in terms of how they need to communicate. At the end of the day, what Sandeep is saying is absolutely right. If the companies themselves don't have a clear idea, it's no use kind of communicating for the sake of it. So when they said, look, we're going to hold on to our guidance and only kind of go back to it till such time as we get clarity, that was kind of clear messaging which went out. So that is it. When we kind of look at companies did start to make disclosures, and if you kind of look at the annual reports, they do have disclosures in terms of the impact with regard to COVID. But were they kind of frequent enough at that time? No. But to offset that, I think investors were picking up the phone and speaking to companies, and companies were responding to the extent they themselves could make sense of what was going on. So I was saying it's a big learning for all of everyone in terms of taking the message home to communicate on an ongoing basis, and with regard to the information and if there's additional information which is available, how's it kind of changing what has already been communicated, or why does it kind of change things? But I think it's been a great learning for all companies, for investors, for regulators, and everyone. And I kind of will end this with where I began, that I think everyone's done a reasonably good job in terms of coping with the hand we were dealt with a few months back.
Well, as they say, a crisis generally brings out the best in you, and I think it does seem that there's a lot of positive that this is brought out in this area. I'm gonna steer this into a different direction, and just picking on what some things that you said in terms of the need and the urgency to communicate more. And I think I'm coming at this from a regulatory dimension. The whole issue around inside information, and the fact that now everyone's remote or largely remote, and we're talking to each other using technology, and that includes within the company and outside the company. And if you layer on this urgent need to now, or this urgency to keep keep the communication channels open. In a physical world, all of us are relatively comfortable with how to safeguard inside information. I think any experience there, or any sort of anecdotes you'd like to share in terms of how you saw this getting manifested through this enhanced use of technology. And maybe I'm going to take this to Sandeep first, and then come back to both you, Amrish and Amit, on your perspectives. But Sandeep, any thoughts there in terms of what additional safeguards you put in place, or you would recommend companies put in place, when they think of this, even as life. Some people say this is here to stay, right? That we will largely be talking to each other digitally, or using technology.
Yeah, Karan. So I think the way, at least I think about it, is that when you're talking to investors, it's important to give them the information that is relevant for them. But we as IROs and the corporates have to ensure that the line which exists out there is not crossed. And that principle holds good whether it's a physical face-to-face meeting, or a digital meeting, or maybe even just a email conversation or a phone conversation. So whatever is the avenue, whatever is the medium, try and answer the question that they have to the best of your abilities. Give them the information which is relevant, which is truthful. But if there's an oopsie issue involved, that's not something that you can communicate. And I understand that maybe with things being more digital, these conversations are a bit different now compared to earlier. But I think at the end of the day, each of us as individuals and all of us collectively have to exercise that discipline.
Yeah, and I think the same principles hold. Amit, any thoughts you have on this topic?
No, look, Sandeep kind of pretty much said it, but I think what it brings focus on is there's this whole debate, which is not debate, the whole development which is happening on digital governance. And that is something which, boards need to focus on. So it has a couple of aspects in terms of what is the company's digital strategy, how are they kind of, digital standards which the company is adopting. And, in the sense, digital standards become very important in terms of how are you going to communicate, what are the channels, what are the protocols which you're going to be following. So I think it's going to be important for companies to focus a little bit on this aspect of it, as, since you mentioned in terms of what is insider, what is outsider, what is the communication which is going on. So it becomes important in today's day and age.
Yeah. Amrish, any comments from you?
Yeah, in fact, I think people are much more careful now than earlier, because when you're face to face, it's possible to cross the line, and many have done that in the past. But then in this digital age, I think it's because digital always leaves a track. So because of which I think people are extremely careful. But then those who want to flout rules always find a way to flout it.
Yeah. No, but I think this was more in the context of the fact that all of us are now, forced to be remote, and any interesting insights there. So thanks for that. I'm going to take this back to another.
Karan, if I may just come in, I think what everyone needs to be careful on is that the dividing line between personal and work has actually got very blurred.
Yes.
And that is one thing which we need to keep in mind when we are having these conversations. And therefore, there's nothing you can do other than being much, much more mindful about your behavior and conduct and conversations.
Yeah, and there's several practical challenges there too, right? I mean, in terms of the amount of space that one has to be able to,
Sure.
live and work in the same place and have these conversations at the same time. I
Absolutely.
think and to your point, it's not that there's an intention to do anything that's incorrect, but it's just a sheer sort of physical constraint of being in the same place with other people who you can't just push out, because they are also
That's
there.
right. That's right. That's right.
I think that has played out, but I think as all of you are saying, I think what we've also noticed is that a lot of us have gotten a lot more careful, and that's what we hear from companies that we talk to, in terms of how this gets conducted. I was going to again steer us back to the ESG sort of discussion, and I know this is something that I think all of you are passionate about in a lot of different ways. But I think in terms of how and why this has become again front and center, and we heard Sandeep's views on how the non-financial aspects of value were actually more pertinent in the initial period of even the crisis, because the financial performance was anyway disrupted. But I think the trends we are seeing here are, this is a good trend, a positive trend, that companies are really questioning why are they in business, and is it, and obviously we are companies are in business to create profits, create value by creating profits, but that's just one of the dimensions, right? It's the and this is actually enshrined in the Companies Act too, right? If all of you recall that companies are actually obligated to society and to environment, who are listed as stakeholders for corporates, and this is in the law. But I think the spirit of the law, and then the way this has been now getting implemented, I think is finally coming together in a lot of ways, where companies are actually sitting back and thinking about how they're creating value beyond just the bottom line. And that could be by just simply by how you look after your employees, how do you look after your customers, what you're doing for the environment, how well governed are you, right? And then again, there's this whole technology interface now with digital governance, as Amit was talking about. So I think my question really, and my first one is for Amit now, that Amit, in your experience, and then you've been you know I guess championing this and pushing for this for a long time. Is it finally coming and getting the attention that it deserves? And is that something that you see as being sustainable?
Oh, absolutely. If you kind of start to look at some developments which have taken place. So, it's interesting. We are kind of on the fifth anniversary of the Paris Climate Accord. And the Prime Minister kind of spoke about it, where he spoke about India's commitment. And he said that India is going to exceed its commitments, which it had signed up for about 5 years ago. But again, why just this? About in early November, again the Prime Minister was speaking at the virtual investor summit, where he again spoke about the primacy of ESG. The government's constituted a 17-member, oversight committee to look at how India is going to kind of reach out and achieve the Paris climate goals. And if boards think that, look, this is not something within their ambit, but greater something for the economy to achieve, they need to look at just the announcements which have been happening from the Ministry of Corporate Affairs and SEBI, when you've got the fresh or the new business responsibility reportings which have to take place, and the developments which have taken place there. Look at it another way. There's estimates vary, but whichever way you look at it, there's some 40 to 50 trillion dollars of global money which is now kind of investing on ESG and ESG related themes. And that number, there's no one estimate, and depending on which definition you follow, but it's a large number. And if some of us think that, look, it's only true for global funds, we have to recognize that during this year itself, there have been 4 Indian fund houses who have launched ESG funds. So it's here to stay. And investors need to recognize that the shift from shareholder primacy to stakeholder primacy is here. And once you're talking about stakeholder primacy, it is not just, what's good for the business of business is business, and therefore I'm going to maximize value for shareholders. But it is employees, other suppliers, people up and down the value chain, the other stakeholders, which includes the employees. It could include the communities, and therefore ESG has got a big role to play in it. So it's here to stay. I don't think it's companies can escape it, and I'm pretty sure the conversations which IR teams would be having would have a lot of focus on what are you doing on ESG. I would just say one thing here, while we ourselves kind of have this conversation, understand what companies are doing. It'll be interesting if companies kind of focus in terms of what the financial implications are, rather than say, look, I've ticked the box and this is what I've done. And the second, of course, is the difference between CSR and ESG. CSR is just one of the aspects of ESG. So I think it'll be good if companies, corporates and their communication keep that in mind. A, financial impact. B, CSR is not ESG.
I mean, do you want to elaborate a little bit on that, on the financial impact consideration? I know where you're coming from, but maybe for our listeners, it'd be good to sort of get a little more detail on that.
We kind of ask companies that, look, you're doing A, B, and C. You've kind of had a presentation. You've said, you've got, this is what you've done for the environment, etc. So is it possible for you to quantify some of it in terms of what does it mean for financial numbers? Now, it may not always mean that, look, your return on capital employed is going to be higher, but one is if you can kind of benchmark this vis-a-vis your other competitors. But the implication of that is that, look, if you've not spent on a particular aspect and the others around you have, then that spend needs to be made over the next 1, 2, or 3 years. Otherwise, you're going to be a laggard. So therefore, it's going to be good to have a sense of what these numbers are. So again, while we are talking about non-financial, at the end of the day, you need to recognize that you're talking to the financial community. So what does it translate to in terms of hard numbers? Does it mean an investment has been made? Or does it mean that it will need to be made? That clarity is good. We also, in this at a broader level, we need to recognize that, look, the science itself doesn't have all the answers at this stage. Regulations themselves will be a little bit fuzzy. So companies might have to take, one step forward for one step back, or they may not even have to take a step forward, but take a step back. But again, it will be good to kind of quantify it and say what it means in terms of hard numbers. Admittedly, even if they're not as sharp as you would want, as you have been with regard to reporting other numbers.
No, I think that's a great point, and I think that just goes back to the fact that this is still a very quickly evolving space in terms of the how to measure, because there isn't one standard framework that companies can look to really quantify these things. Interestingly, the International Accounting Standards Board is working on proposals to actually look at non-financial information, and hopefully there should be some guidance coming out from there once that project gets underway. But Sandeep, from being on the other side and being someone who needs to do this now, what's worked well for you in terms of being able to quantify some of these non-financial areas? Any tips there that you have that you could share with us?
Yeah, so first is, I think, as Amit rightly said, it is absolutely for real, and I don't think companies or IROs will really have an option but to go deeper into it over a period of time. I can say it because of my personal experience over the last 12 months. We've actually spent a lot of time on brainstorming this and recently came up with a ESG 2030 vision. This is something that stakeholders are demanding, and it's not just investor base to the extent that you can have a strong ESG story out there. It just adds to the overall layer of a company. That's point number one. I think some of the challenges that we face is on the ESG front. One is really the absence of a common reporting standard, as you said, because while companies can talk about their ESG, how do investors really compare progress of two companies who are following two different standards? There's probably nothing very concrete in terms of what the scope of the conversation on ESG should cover. So I'm sure things would evolve on that front. That's point number one. The other thing is basically whether ESG really fits into, and actually this is my expectation as an IRO from investors, that is really the ESG scorecard deeply intertwined in the investment framework of an investor. So while we can give a 45-minute speech on ESG, and I'm sure corporates will figure out ways to do that, are investors really looking for investing in companies because of their superior revenue growth or margins? And let's say if the revenue growth and margins is in a period of pressure, does the strong ESG scorecard of the company comes to its rescue? And frankly, what I see is that while investors do want companies to cover ESG, I'm not sure if it's very closely intertwined with into their investment thesis or the investment decision. But I'm sure it will change over a period of time.
So that's a very interesting question, because or perspective, because as you heard Amit say, there's serious amounts of capital chasing social and impact centric businesses, right? And then even from an ESG perspective, I think if I look back at the performance of even the sort of listed entities, the ESG index actually did outperform the non-ESG sort of index entities in that sense. But let's ask someone who advises people on how to invest. Amrish, what's your view? How would you respond to Sandeep?
See, I think finally everything boils down to valuation. I mean, why do we have something in the same sector possibly quoting at 10 PE and something else in the same sector quoting at 40 PE? It's finally the perception. And if you're doing the right things, if you're compliant, I think the perception clearly improves, and because of which your valuation also improves. And it's just not investors, it's also your customers, it's also the other stakeholders. For example, the customers who could possibly prefer to buy your products compared to the non-compliant ones. I mean, this may not happen immediately, but as things evolve, as people become more aware, clearly you will have customers shifting to more compliant companies than the non-compliant ones. Although as of now, there is a strong investor interest globally in India. I think it's yet to really evolve in a very big way. But then looking at the global trends, clearly I see the allocation for ESG assets actually doubling possibly in the next 4 or 5 years. But I think as of now, as far as India is concerned, I think the only issue is the poor quality of ESG data which is available. I think that is, if I'm not wrong, I think that's the greatest barrier which investors and the fund managers are facing currently.
Well, Sandeep, you heard it from the man who advises companies or people on how to invest. I think so. I think we've nearly come to the end of the time that we had allocated for us. But I'm still gonna, come back to each of you and maybe ask you to make one final comment. And if you had a looking glass that looks out beyond the crisis, what is your thought in terms of how this will shape investor relations going forward? So maybe a quick comment from each of you before we close this, and maybe we can begin with Sandeep again.
Yeah, so my closing comments are that I think this is really for here to stay. I don't think we really can necessarily get rid of it, and we should actually use this as IROs as opportunities to improve the effectiveness of the function. As I said, it really gives us tremendous opportunity to reach out to investors in far-fetched parts of the world. So if you're looking at stepping up the engagement, do it now. Don't really wait for the flights or the air travel to open up. Leverage technology, reach out to investors, do the analyst day, just engage with investors, and people will actually appreciate the outreach that you're making rather than necessarily the way you are trying to go about it. So just go ahead and engage with investors.
Amrish?
There's clearly an awards events where we are actually recognizing the good work being done by a couple of the companies. But I think we should have a carrot and stick sort of approach, because there are a host of other companies. Let's not talk of all the companies, but at least the top 500 companies. And I think we should have a system of pulling up the ones who are actually falling short. And I suppose even the exchanges, I think, should provide an additional flag for those companies which are practicing good communication and IR, because I think at least that will ensure that the rest of the companies at least strive to be in that group.
That's a very interesting thought. Amit, your final comments?
I'll kind of say something which is kind of a theme which is recurred throughout the conversation today with all of us, which is technology. So I think the technology is kind of transformed over the last 5-6 months, how IR work is going on. And some of the hesitancy which companies had, or IR people themselves might have had, with regard to saying that, no, we want to have a physical meeting. Some of that hesitancy would now be behind companies. So whether it is meetings, whether it is investor conferences, investor days, whether it is sell side conferences, a lot of them over the last 6 months have taken place through the medium of technology, and therefore that is going to be one big change which we will kind of continue to see. The form and shape might become a little bit more sophisticated. There could be ways of sharing much more information out there. And that, combined with the fact that, something we've not spoken about at all is the fact that the new SEBI guidelines, which kind of say that, look, each conversation which you have with IR needs to be recorded. And therefore, we may agree, we may not agree, we may all have our views about that. Let's park that aside for the side. But it kind of again points to the fact that technology is going to change how this engagement between investors and companies is taking place.
So before I sum this up, Sandeep, you were shaking your head, so I'm going to get you to come in with a quick comment on what Amit just said.
Yeah, I mean, I can understand where SEBI is coming from, but if there are some companies or a handful of companies which are not doing things the way they should be, the right approach is to really impose penalties, censure them, rather than come up with regulations which just broad brush all companies in similar lens. And something like this actually is going to be counterintuitive. Tomorrow, if you have to really get into recording conversations, I don't know how many FIs or even domestic houses will really pick up the phone and talk to investors. And if there is no engagement, all of us can imagine the impact on share price. And I don't know whose interest will be furthered in an outcome like that.
No, thanks for that candid remark, Sandeep. And I think if I were to sum up this conversation, first of all, thanks to my fellow panelists. We had some good insights from all of you. But three things stand out for me. Technology, I think that's centric and it's here to stay, and it's going to be more and more relevant. I think the continued relevance of communicating often and more, and in a constant way. I think one can't deny that. And the third and last one is really, again, the emphasis on the non-financial aspects of a company's performance. So with that, we'll call this to a close. And thanks to everyone who's been a part of this panel, and thanks to everyone for attending this. Stay safe, stay well. Thank you very much.
Before we move on to the much-awaited section of today's event, that is the IR Awards, I would now introduce Mr. Sivaram Mallela, the current advisor to the IR Society and former governing board member of ICFAI India. He is a chartered accountant by profession, having 3 decades of experience in new initiatives in higher education and financing of higher education. Over to Mr. Sivaram Mallela, who will explain on the methodology of IR Awards.
Hello everyone. The universe for the selection criteria was BSc 500. We had shortlisted these based on parameters such as the market cap, institutional holdings, available earnings call transcript, to arrive at a sample for doing a survey with the select buy side and the sell side firms. Based on the feedback, the screening committee had selected as many as 4 awards under the category of large cap, 3 awards in mid cap, and 2 awards in the small cap category. Thank you.
Moving to the IR Awards event now, we would like to mention that this time around there has been a trend emerging in favor of companies giving importance to environmental and social governance, that is ESG. We begin with the large cap category, and in the ESG category we have our first winner, and the winner is Grasim Industries Limited. The company has also received good feedback on its integrated report that was recently launched. A big round of applause, please. This is what the CFO of Grasim Industries Limited, Mr. Ashish Adukia, had said.
Grasim has always had a 360-degree approach to all our stakeholders. We take care of all their interests. When we came across the whole concept of integrated report, we realized that it's a perfect report to actually reflect our approach towards us shareholders and the stakeholders, because it takes care of all the capitals and it has a very different approach towards performance evaluation than what an annual report would be. To start with, this integrated report was more of a self-evaluation where we looked at the 6 capitals that is reported in the integrated report and how we have done against those 6 capitals. I think over a period of time, we will keep improving and get better in those 6 capitals. So from self-evaluation, it will start to become a threshold for ourselves to improve.
Thank you for your speech, Mr. Adukia. Another company that has emerged as a winner under ESG category in large cap is the PSU company GAIL Limited. Please give them a big hand. Over to Mr. A.K. Tiwari, CFO, GAIL Limited.
At the outset, I would like to thank IR Society for recognizing our effort in making our IR program one of the best in the industry. We got an award in environment, social, and governance. Investors are increasingly applying these non-financial factors as part of their analysis process to identify material risk and growth opportunities. ESG metrics are now commonly part of mandatory financial reporting in our country so far. For many, ESG means climate change, but the term means much more. It covers social issues like companies' labor practices, talent management, product safety, data security, and governance matters like board diversity and business ethics. The philosophy and vision behind GAIL's business is to grow in a manner that is sustainable for the economy, stakeholders, community, and environment. We assure that we are not merely a profit-driven business, but are also committed to our environmental and social concerns. Thank you once again on behalf of GAIL India Limited for recognizing our IR program.
Thank you for your kind words, Mr. Tiwari. Now moving to the category Stars on Sell Side. And as the name goes, the company has emerged as a star for being voted by the sell-side broking firms. And the winner is TCS Limited. Big round of applause. Over to Mr. Kedar Shirali, Vice President and Global Head, Investor and Analyst Relations, TCS.
It's truly gratifying to receive this award. Hearty congratulations to all the other winners and a big thank you to the organizers. It's high time that India had its own set of awards to recognize the best performing investor relations teams and help elevate the quality of IR in the country. I have been doing this for 12 years and I wanted to share a couple of lessons for the benefit of those who are newcomers to this role. First of all, use your time with investors for high quality conversations. So if you are still spending a lot of time sharing new data metrics and explaining those to them, then you need to revisit your disclosures and make it more comprehensive. Second, be extremely well informed on what's going on about your own company, about your sector and the larger economy. Third, form your own opinions on developments in the environment and the impact on your company. Get these validated by your management team and don't be shy about sharing these opinions with investors. And lastly, be gracious when you talk about your competitors. Talk about your own organization's strengths without talking ill about others. So those were my 2 bits. I hope you find those useful. Thank you all once again.
Thank you so much, Mr. Kedar Shirali. Now moving to mid-cap category, and yet again under the ESG category, we have Tata Power Limited as a winner. A big round of applause, please. Over to Mr. Praveer Sinha, CEO and MD, Tata Power.
At the outset, I would like to thank BSC Limited, KPMG, Investor Relations Society for the Investor Relations Award that has been given to Tata Power for ESG movement. ESG for Tata Power, like any of the Tata Group companies, is a very integral part of the company and is in fact the DNA of the company. For us, environment protection is not something that we do for meeting the stipulations or guidelines, but it is a way in which we care for the future. And when we do this, we look at it from a long-term perspective and how we can demonstrate leadership by doing things which are more than the statutory requirements. We are very proud that over a period of time, we will become a zero carbon company, and we are the first company in India who have taken a pledge that we will become net zero before 2050. Apart from that, reaching out to the community has been again a very, very integral part of the Tata Group, and the whole purpose of doing business is to reach out to the community and provide them the benefit. Our founder Jamshedji Tata believed in this, and this is absolutely ingrained in us. And also the aspect of governance, which again is a part in the way we carry out the business. And the very fact that Tata Power and many of the Tata Group companies are more than 100 years old demonstrates that governance again is something which is very strongly and strictly adhered to in all our activities. We are very proud to get this award. Once again, thank BSC, KPMG and the Investor Relations Society for giving this award, and we do hope that the leadership that Tata Power has demonstrated in this area will continue and will be an inspiration for many other industries in the country. Thank you.
Thank you, sir. In the mid-cap section, we have a new category this time, getting noticed. According to the broking companies, this particular company is getting noticed in investors' communication, and the company name is Vinity Organics Limited. Congratulations, Vinity Organics. Over to Ms. Vinity Saraf Mutreja, CEO and MD, Vinity Organics Limited.
Hello everyone, I'm Vinity Mutreja, MD of Vinity Organics Limited. I would like to thank Investor Relations Society for selecting us for this award, getting noticed. I would also like to point out that ours has been a listed company since inception for the last 30 years, and we take our compliances very seriously, and we are very proactive with all our disclosures. We have a very good transparent investor relation policy, and we have a good team to take care of that, and that is why the investors are satisfied with us in this regard, and we have institutional investors as well as a lot of retail investors. Thank you.
Thank you for your message, Ms. Vinity. The next category in mid-cap is stars on sell side, and under this category, our winner is RBL Bank. Congratulations to the winner and a big round of applause. Since the spokesperson of RBL Bank was traveling, we have received this quote from the RBL Bank's communication department, and I would like to read it out to you. We are very happy and honored to have been chosen as a winner in the Stars on Sell Side category, and would like to thank Investor Relations Society, BSC and KPMG India. At RBL Bank, our approach towards investor relations has been of open and transparent communications. We have been very accessible as a management team to investors and stakeholders. Thank you for having sent the quote. Moving to the small cap segment, under the category of getting noticed, our winner is Indian Bank. A big round of applause. Over to you, Mr. Arun Kumar Bansal, CFO, Indian Bank.
I thank the Investor Relations Society, BSC, and KPMG for the recognition bestowed on us. Getting noticed by the analyst community is indeed a great honor for us at Indian Bank. I believe this recognition is a result of the concerted teamwork of everybody at Indian Bank. Doing the right things within the constraint of the macroeconomic factors of last year has been a big challenge. However, the team has successfully managed to circumvent the challenge and perform to deliver optimal results. Indian Bank is committed to provide the best banking services to the nation and its people, and it will continue to play a pivot role in nation building. We are thankful for the trust placed in us by the investor community and other stakeholders, including the analyst community, and hope to do our best going forward also. Thank you.
Thank you for your message, Mr. Kumar. Our next winner under the Stars on Sell Side category is Bajaj Electricals Limited. A big round of applause and congratulations. Over to the Chief Finance Officer, Bajaj Electricals Limited, Mr. Anant Purandare.
I'd like to thank IR Society of India and their associate BSc and KPMG for giving this recognition and award for Star of Sell Side. Also like to thank FIS and DIS and the investor companies who have given us the rating to get this recognition. It's a great feeling having such a recognition which inspires us to keep the good work. At the same time, it also bestows responsibilities on us. We being a part of Bajaj Group, we always give highest importance to the corporate governance, and we have a transparency in dealing with all our stakeholders. There are ups and downs in the businesses. However, how do you deal with when there is a downturn and difficulties in the business and keep the trust and confidence of your stakeholders? We are committed to create the value for our investors by prudent allocation of the capital and improvement in operating margins in the business. Thank you.
Thank you so much for your message, sir. Now coming to the star performer in today's event under the category of Best Standout IR, and our winner is Infosys Limited. A standing ovation to the winner, please. Over to Mr. Sandeep Mahindru, the current Finance Controller and Head Investor Relations for Infosys Limited.
Investors are key stakeholders at Infosys, which makes IR function a critical function for the company. It's extremely important for us as a company to have continuous and ongoing engagements with the investor community, because that plays its part in making us a better and a more successful company. I'd like to thank all investors for their continuous support and engagement with us over the years. Thanks also to the management team, my colleagues Shubhro and Shweta, for playing their part in enabling us to win the Standout IR Award. Last but not the least, thanks to IR Society, KPMG and all the sponsors. Thanks everyone, please stay safe and have a good day.
Thank you so much for this inspiring message, Mr. Mahindru. And with this, we come to the end of the event. Those were all our awards. But before we take your leave, on behalf of Investor Relations Society, I would like to thank all our collaborators, BSE Limited and KPMG India, for their constant support and guidance. I would like to also thank our media partners, Corporate India, for sharing their database and showing the willingness to give us extensive media coverage. Hope you all had a great time with us at this virtual event, IR Awards 2020. Signing off for today, your host for the event, I am Priyanka Rohila, and it was a pleasure being part of this prestigious event. Thank you and namaste.